ever feel like you're doing all the right things, saving diligently, budgeting, but somehow still not really getting ahead financially?
Yeah, yeah, I hear that. It's a common feeling for sure.
Well, what if I told you that simply saving money could actually be kind of holding you back?
Holding you back. Okay, now you've got my attention. Tell me more.
Right. It's a bold claim, and it's actually the central point in this article I came across why you should stop saving money right now, do this instead.
Whoa, stop saving money.
That's pretty provocative. I definitely want to unpack that.
Yeah, so let's dive into this and see if it holds water.
Sounds like a plan.
The article starts off by highlighting this idea that we're often told to just save, 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 but in today's economy, especially with inflation the way it is, that might not be enough. Yeah, inflation can really throw a wrench in your plans if you're not careful. It's like your money slowly becomes worth less over time because prices keep going up.
It's so sneaky, right? You don't always realize it's happening until things that used to be affordable suddenly aren't.
Exactly. And that's where this article's argument comes in. It's not enough to just sock away your cash, especially in a low-interest account where it might not even keep pace with inflation.
So what are we supposed to do then? Just throw our hands up and accept that our money's going to shrink?
Definitely not. The article's point is that we need to be more strategic, more proactive. Think investing for growth, not just saving.
Investing for growth. Okay. Now, that's a phrase I feel like I hear all the time, but to be honest, it always seems a little intimidating. Like, I don't have a finance degree,
Yeah, I totally get it. But investing doesn't have to be intimidating. Think of it like this. Imagine you're planting a garden, right?
Okay, I can picture that.
Instead of seeds, you're planting your money. And just like with a garden, you want to choose the right soil or investments for your money to grow.
So what are some of the soils or I guess the investment options that this article recommends?
Well, it mentions a few. The stock market is one, of course. Real estate is another big one.
Yeah, I've had good things about real estate.
Yeah. And then there are things like peer-to-peer lending. Have you heard of that?
Vaguely. I think a friend mentioned it once, but I'm not really sure how it works.
Basically, it's like becoming your own little bank. You lend money to individuals or businesses in exchange for, hopefully, a better interest rate than you'd get from a traditional bank. It can be a bit more risky, but also potentially more rewarding.
Huh. Interesting. So there are quite a few options out there.
Absolutely. And the article stresses that the key is to find investments with the potential to outpace inflation, so your money is actually growing faster than the cost of living.
Makes sense. But I'm guessing not all investments are created equal, right? Some probably riskier than others.
You got it. There's always a trade-off between risk and reward. Generally, higher potential returns come with higher risk. That's why diversification is so important.
Diversification. Okay. Remind me what that means again.
Don't put all your eggs in one basket. Instead of putting all your money into, say, just stocks or just real estate, spread it around. Invest in a mix of different asset classes, stocks, bonds, real estate, maybe even a little bit in something more alternative like collectibles, if that interests you. The idea is to balance things out so if one investment does poorly, it doesn't wipe out your entire portfolio.
Diversification. Got it. It's like a balanced breakfast, but for your money. Now, this article takes it a step further, though, and starts talking about building assets, not just savings.
Ah, yes. This is where it gets really interesting.
It even highlights rental properties as a prime example. So what's the difference between just saving money and building assets?
It's a subtle shift in mindset, but an important one. Instead of solely focusing on tucking money away for the future, building assets is about creating streams of income that work for you, even while you're, off doing other things.
Okay, I'm intrigued. So rental properties, how do they fit into this building assets idea?
So imagine this. You buy a property, and instead of living in it, you rent it out to tenants. They pay you rent every month.
Okay, so you're making money from the rent.
Exactly. You're building an asset that generates what's called passive income.
Passive income. That has a nice ring to it.
Right. A powerful concept for building long-term wealth, because the money's coming in without you actively trading your time for it. And rental properties are just one example.
What are some other ways to generate this so-called passive income?
Well, there are things like dividend-paying stocks, for example, or even creating and selling digital products online, like ebooks or online courses. It takes some effort up front, but once it's set up, the income can continue to flow in.
Huh. I never thought of it like that. That's really cool. So it's about building systems that work for you rather than always relying on your direct effort.
Exactly. You're creating a stream of income, not just a pile of savings.
I like it. Now, this article also mentions these tax-advantaged accounts, like 401ks, IRAs. I gotta be honest, those always seem so complex to me.
I hear you. They can seem intimidating at first, but the core idea is actually pretty simple. They're basically accounts designed specifically for retirement savings.
Retirement savings, okay. But how are they different from just like opening a regular savings account and calling it my retirement fund?
Well, the big difference is the tax advantage. Depending on the specific type of account, you might be able to deduct contributions from your taxable income, which can lead to some significant tax savings.
Ah, so that's why they're called tax advantaged.
Exactly. And then on top of that, many of these accounts benefit from what's called compound interest. Have you heard of that before?
I feel like I've heard of it, but I'm not entirely sure what it means. Does it just mean you earn interest on your
It's
savings?
more than that. It's like earning interest on your interest. Imagine it like a snowball rolling down a hill. As it rolls, it picks up more snow, getting bigger and bigger. That's compound interest at work. Over time, even small amounts can grow significantly.
So the longer your money's invested, the more that snowball grows.
Exactly. It's why starting early with retirement savings, even with small amounts, can make a huge difference in the long run.
Got it. Now, there's one more point in this article that I wanted to touch on because it seems a bit counterintuitive. It talks about smart debt management, almost like debt isn't always a bad thing.
You've hit on a really important point, and it's something a lot of people struggle with.
Right. It seems like we're always told that debt is bad, but this article is saying there's more to the story.
Exactly. It's not about avoiding debt entirely. It's about being strategic about it.
Hmm.
There's good debt and bad debt. The article argues that using debt wisely, like, say, taking out a low-interest loan to invest in an income-generating asset, could actually help you build wealth faster.
So, like using debt strategically, almost like leverage to acquire assets that will then generate income.
Exactly. A perfect example is that rental property we were talking about earlier. Many people use mortgages to buy rental properties, and as long as the rental income covers the mortgage payments and other expenses, it can be a smart way to build wealth over time.
Okay, that makes sense. But this doesn't mean all debt is good, right?
Absolutely not. High-interest debt, like credit card debt, is almost always bad debt. Paying that down as quickly as possible should always be a top priority.
Right. It's about being smart and understanding the difference between, say, a high interest credit card balance and a strategically used loan for an income producing asset.
Exactly. It's all about context.
This is already so much to think about, but there's one more thing I wanted to touch on. The article also stresses the importance of having a solid emergency fund, but suggests maybe exploring options beyond a traditional savings account for that.
Right. You always need that safety net, those funds that you can access quickly in case of an unexpected expense or job loss.
For sure. So if we're not just keeping it in a regular savings account, what are some other options for those emergency funds?
There are a couple of options that can potentially offer a slightly higher return than your typical savings account, although usually still lower than riskier investments. Money market accounts are one. They often come with check writing privileges, which can be handy.
Oh, yeah, that is convenient.
And then there are certificates of deposit, or CDs. Those generally offer a fixed interest rate for a set period of time. You do have to lock your money up for that time, but in exchange, you're guaranteed that rate.
Huh. So it's about finding a balance between accessibility and a decent return, even for those short-term savings. Wow, this article has really given me a lot to think about. It seems like the key takeaway here is that financial well-being isn't just about saving diligently. It's about being proactive, making informed decisions, and finding ways to make your money work harder for you.
I think that's a great way to sum it up. It's about taking control of your finances and creating a plan that aligns with your goals. Whether that means exploring the world of investing, looking into building assets, or simply being more strategic about debt and savings, the most important step is to get informed and take action.
I completely agree. So, for our listeners out there, here's something to consider. If you could design your ideal financial future, what would it look like?
Ooh, I like that.
Yeah.
What would it look like, and what steps can you start taking today to make that vision reality?
Don't limit yourself to just saving. Get out there, explore the possibilities, and see what amazing things you can achieve.
I love that. And remember, this is a journey, not a race. Every step you take towards a more secure financial future is a step in the right direction.
Absolutely. Well, on that note, that's a wrap on our deep dive for today.
Until next time.